New tools and technology are changing the way financial markets operate today. Keeping the requirements of both the central banks and the financial markets in view, Refinitiv has developed a holistic central bank proposition that includes products and services covering a broad spectrum: open market operations, auctions, secondary markets, post-trade, regulatory reporting, market surveillance, benchmarks, economics and research, portfolio management, data and analytics, etc. Almus Risk Consulting Mumbai is a risk management company whose specific focus is on serving companies in the SME sector. It pioneered the unique solution of outsourcing corporate treasury operations with a particular focus on managing currency, commodity, and interest rate risks. Almus is headed by partners with wide and rich experience in banks, including public sector, private sector, as well as foreign banks and corporate treasuries. Almus Academy continues to respond to the market participants' need to stay abreast key developments in financial markets by creating and delivering relevant content via the education initiatives. For this purpose, Almus created a forum called Almus Annual Conference, now named Almus Rupee Money Conference. I'll share with you a few key highlights of this year's conference, which include a LIBOR webinar on March 25th, 2021, an insight on oil, cotton, and soya conducted in July 2021. Today's webinar is a continuation in the same space. Please stay tuned for more upcoming webinars in the future. Coming now to today's topic of central bank digital currencies. According to a 2021 survey by BIS, over the last few years, the share of central banks actively engaging in some form of CBDC work grew by about 1/3 versus 2019 and now stands at 86%. From conceptual research till a few years ago to the stage of experimentation now, central banks are at various levels of advanced stages in CBDC engagement. World over, financial stability, monetary policy implementation, financial inclusion, payments safety, and payment efficiency for both domestic and cross-border transactions continue to be key motivators for regulators to adopt CBDCs. Closer home in India, a high-level interministerial committee set up by the Ministry of Finance had recommended the introduction of a CBDC with changes in the legal framework, including the RBI Act, which currently empowers the RBI to regulate the issuance of banknotes. Subsequently, the Reserve Bank of India, Deputy Governor T. Robi Shankar, recently announced that the RBI may conduct pilot projects for retail and wholesale central bank digital currencies in the near future, and the RBI is actively working towards a phased implementation strategy and examining use cases of CBDCs. While we watch this space closely to monitor the evolving landscape, we are all looking forward to hearing the views of the experts in today's webinar. I leave it to their expertise to take us over the finer nuances of this topic. On that note, I sincerely hope you will enjoy the session today and take back perspective on what is poised to be a pivotal development in the global financial landscape. Thank you all for your participation today. And now, it is my great honor to introduce to you Mr. G. Padmanabhan, sir, former Chairman, Bank of India, and former Executive Director, Reserve Bank of India. In an illustrious career spanning 35 years, he has handled various departments in the Reserve Bank of India, contributing immensely to the development of the Indian financial markets, both the foreign exchange market as well as the domestic bond markets, information technology, and payment systems. Many of us are aware of his great contribution to the evolution of digital payments and settlements at the Reserve Bank of India. Mr. Padmanabhan's vision and foresight enabled him to anticipate a decade's requirement of infrastructure. To give shape to this vision, he built up a large-scale infrastructure at RBI, which is equipped to cater to the demands of the market for another decade. His contribution to payment systems is globally recognized by the international banking community as well. Post his retirement from the Reserve Bank of India, Padmanabhan sir served as non-executive chairman of the Bank of India for over 5 years. During his tenure there, he acted as a guiding force for the Bank of India board and senior management. Indeed, he is living proof that a brilliant central banker can be an extremely successful commercial banker too. Mr. Padmanabhan holds a postgraduate degree in economics and a master's degree in business administration from the Birmingham Business School in England. He is also a keen sportsman and has represented his universities in tennis during his college days. He regularly plays the game to date. And now, without further ado, I hand over to Padmanabhan sir to take this session forward. Thank you very much. Sir, over to you.
Thank you. Thank you very much. Thank you, Ruchita. Thank you, Venkatesh, for calling me over. Good evening. And as Ruchita briefly said, we are gathered here to discuss a topic that cannot but be an agenda on every seminar on technology and the financial sector today. I think two of them. One is the crypto and the other one is the CBDC. Whether one is the villain, the other is the hero, we do not know. But if that is so, then one of the members of our eminent panel has been a hero or villain in the morning, and he is going to be the other way around in the evening. I will come to that shortly. Now, the question that we try to address through this 75-80 minutes of our conversation is that is central bank digital currency going to be a game changer, or it is just a fad which will after some time just fade away? Now, there are people who think that central bank, which generally moves very slowly, and probably innovation and central banks are at opposite sides. Today, we are talking about a subject which is a game changer, which is being driven by the central bank. And many people think that the reason for that is the crypto. Now, the question is it so, or are they completely different? Now, the fact remains, as Ruchita said, that the idea has caught on with several central banks. I think BIS has gone on record saying that at least 55, 60 banks, major central banks around the world, are doing work in this direction. There are small economies which have already embraced, whether you want to call that crypto or CBDC. For small economies, it makes very little difference. But among the major economies, I think PBOC, China is way ahead of the rest of the world in terms of implementing the CBDC in its true form. The proof of concept is being experimented there in a big way. Now, India has also come on board. I think Ruchita again did make a mention about the government working group and DG Ravi Shankar going on record stating that the idea of central bank digital currency has already come. But what is not known to many of us outside is that there is already an internal working group which is under the Department of Currency Management in Reserve Bank of India, which is actually working towards this CBDC in what form it can be implemented as far as India is concerned. So all these aspects, as we all know, has rekindled enormous interest on the subject other than the crypto. And the recent interaction, I think, with the governor, which got reported in the press, I think there is also an indication about the possible launch of CBDC in India by December, at least as a proof of concept. Now, to discuss these various aspects of CBDC, I hope by the end of the day, we have a fair understanding of what are the issues and what is this all about. I think I have two experts, and let me briefly introduce them, although they are very well-known personalities. First, Mr. Sambamurthy, former chairman NPCI, former director IDR-BT, and these roles he assumed after being a career banker. He was chairman of a bank, and he was executive director of Indian Bank. Before that, his parent bank was Syndicate Bank, and today he runs a big initiative of retired employees in Syndicate Bank getting together by way of training and imparting knowledge about foreign exchange and foreign exchange markets to the people at large. In financial circles, he is fondly known as the professor for his academic bent of mind. And our association goes back a number of decades, although I think both of us remember that we first ran into each other when I had gone over to London regarding a Reserve Bank of India work, and he was heading the Syndicate Bank of London branch. And I've always found his research and thoughts well ahead of times. Of late, of course, he can claim his inclusion in the Guinness Book of Records for the maximum number of participation in CBDC seminars that are held in India. So if there is a CBDC seminar in India, Sambamurthy is always there. Navin, Surya, well-known face in the fintech space, has varied interest from prepaid wallets to crypto to CBDC. As I said in the morning, he was inaugurating a crypto seminar, and he is now with us to do the CBDC. And if CBDC is thought as answer to crypto, I don't know on which side he is going to be, but interesting to hear him. I must also say that beyond this, he is also one of the applicants for the new umbrella entity. I think all of us got excited with this new umbrella entity for a long time, and I must concede that he has achieved 66.6% success as we speak. He has a new umbrella, but the entity is still missing because the Reserve Bank is not coming out with that. Now, as we know, the central bank digital currencies, commonly known as CBDC, are gradually moving towards a global implementations, and we must understand that this has complex implications for the international financial systems. The CBDCs represent not only currencies in digital formats, but also a new digital medium of exchange, which crypto generally is thought not to be. It takes care of the settlement and payment verification, and one with a potential to restructure the entire global financial system and the way the trades are settled. So CBDC, I would argue, if it is implemented widely, goes much beyond the private crypto space that we are talking about. Now, the IMF, just to give a brief introduction, the working group which had identified that any CBDC implementation, it says it like to address four design issues. Now, whether it all depends upon, I think to conceptualize this, it is easy if you think this way. Each of this, what I'm going to tell, is depend upon what is the primary role that a central bank is going to play. Whether they are going to be playing end-to-end game, taking care of the accounts, everything, or is it going to be a tiered structure? This is the basis on which the four issues have been flagged, let's say, by the IMF. One, whether it is going to be account-based or token-based. Now, account-based, obviously, I think everybody will have the accounts with the central bank, and the token-based is a little different. It is also interesting because this is one of the issues that I would be flagging as we take up the questions, because token-based probably ensures the privacy and anonymity, which an account-based may not to that extent. So that's an issue. So what is ideal for India? That is one issue that we have to take up. The other thing is whether the CBDC will be issued wholesale, retail, or general. Wholesale is generally for the regulated entities. To just a wild example, but to understand, it's more like an RTGS, large value, thinking about regulated entities, whereas retail, we go into the individual small value transactions. The third issue in CBDC conceptually would be whether the currency will have direct, indirect, or hybrid issuance. Again, it depends upon whether the central bank is going to be owning this entire thing, they'll be entirely responsible, or there is again going to be a tiered system. And finally, whether the network will operate in a centralized manner or a decentralized manner. Now, these are the critical issues that the central banks are debating as they think through the architecture. And now, for those of you who are interested in this subject, I would straight away refer you to two publications and publications which.
Somebody. Sir, we couldn't hear you. Somebody has muted us. I don't know what happened.
Where did I lose you? Or you lost me?
You were talking about two publications.
Yeah, two publications. I think that's all I said. So two publications I think I would refer you to. One is a chapter on the latest annual report of the Bank for International Settlements. The chapter discussing about the CBDC, an opportunity for the monetary system, and it comprehensively details how CBDC is an opportunity whose time has come. Now, the contrarian views will be seen in a recent speech, and a very interesting recent speech by Fed Reserve Governor Chris Waller, and his topic is titled CBDC, a solution in search of a problem. So two completely different views, and let me start with positives. Let me just briefly mention what are they. According to the BIS report, CBDC offer in the digital form the unique advantages of central bank money. What are these advantages of central bank money as we call it? The settlement finality, liquidity, and integrity. Now, the report calls CBDC as the advanced representation of money for the digital economy, and while it says that there are enormous technology challenges in adoption of CBDC, they say that what is more exciting is not the wholesale CBDC, which I talked in the beginning briefly, but the retail one. And the question that is often asked is that what is it that is going to do more than an efficient retail payment system that many countries have been able to implement without the central bank involvement directly, maybe for the settlement, but not for the end-to-end settlement. What is the advantage that it brings about? And anywhere in the world today, when the retail payment system is being talked about, the one system that gets obviously flagged, which is pride of the country, is the India's UPI. So when India has a very efficient UPI, what is CBDC that is going to bring above this UPI? That is one issue. Now, it also draws the difference, as I said, between the CBDC, the wholesale and the retail. And obviously, most of our conversation that we are going to have will concentrate on the retail. And in the retail form itself, we must understand that there is a fundamental difference between what they call, quote unquote, a walled garden approach, which means that it's a limited scope within a garden which is walled. So it caters to limited number of people within, or we are talking about a public town square approach. And obviously, when we are talking about a big change, we need to concentrate and talk about what is the public town square approach rather than the walled garden approach. Now, let me take a couple of minutes and talk to you about the contrarian views. Now, the question that he says is, the people go ho-ha about CBDC, people talk about many things. Now, the fundamental question that that Waller raises, the Fed governor raises is, what problem would a CBDC solve? Or in other words, what is the market failure or inefficiency that CBDC is trying to address? Now, he says he has carefully considered at least the American system, and he finds that there is nothing specific that is being offered by the CBDC which cannot be offered by the private sector, or which is already being offered by the private sector. And to validate his views, I think it takes a few questions and tries to answer all of them in the negative. Now, let's quickly look at the question. Could it be that the physical currency will disappear when CBDC comes? He says that's something which is just impossible. The second question that he raises is, could it be that the payment system is too limited in reach, and that by introducing a CBDC would make the payment system bigger, broader, more efficient? Maybe, but he says if you look at the cost benefit, it is not to the extent that it is really to be pushed. In fact, in India, the situation could be quite different. I think Mr. Sambamurthy will have a lot to say how the currency distribution is a huge overhead as far as the Indian economy is concerned. Now, the next question he answers is that, could it be that the existing payment services are too slow? No, maybe for America it's too slow, but I think we can talk about the retail payment system, which is one of the best in the world. Now, could it be that too few people can have access to the payment system? Could CBDC improve financial inclusion? And to Waller, that's not an issue, because they're talking about 1% of the population ultimately as far as the US is concerned. So he says that central bank need not push for this. And then the issue that he flags is, could it be that CBDC is needed because the existing payment services are unreasonably expensive? Now, this unreasonably expensive payment system will have to be taken care of or opposed by a central bank coming in with the notes payment system, or there are other ways? And he again comes to a conclusion that probably CBDC is not the answer. Now, then he raises the question, could CBDC solve for inadequate innovation or lack of information as far as the government is concerned? Then he says that for CBDC to succeed, basically, a bit of anonymity that cash provides will have to be provided in some form or the other, whether we like it or not. And if we are doing that, then there is no point. So he says that maybe that as far as the US is concerned, although US is still to come out with an official paper on their approach to CBDC, Chris Waller probably has preempted that, saying that as far as the US is concerned, this is perhaps not the right time. So I would utilize the two experts here to raise certain specific issues, give a flavor of the implementations around the world during the course of our conversation, and both of them would be free to answer the questions that I raised, although I may be addressing that initially to a particular person, after which we hope we will have some time to ask questions. So with these opening remarks, now let's get to the panelists, and maybe the ideal way of moving forward is that maybe each of you could give your initial thoughts, 3 to 5 minutes, and after which we can go into specific questions and try to specific issues and try to get your views in the matter. So let me start. I don't know, left, right, maybe Navin go first. Yeah.
Okay, thank you, sir. So, sir, I think CBDC is more about technology implementation on currency. I don't think anything is changing for the role of currency. If you look at today's currency, which is coins and notes, I think we're talking about one more form factor, which we have not talked for long, which could be virtual. So fundamentally, nothing changes the role of currency. And if you really step back and you see that the currency in today's time, both coins and notes, does not work efficiently when it comes to digital channel. You need intermediaries, you need money, you need, let's say, digital payment services, all kind of issues. So it is creating a stronger product. So today, currency is stronger in India's context when it comes to every other digital payment product, but when it comes to digital, probably it's the weakest link. So the moment you put this steroid onto the currency and make it also digitally acceptable, it becomes a complete and a future ready where the future is headed. So that was my very quick initial comment on the 4th year. So actually I was to talk about the design principle very quickly and my personal view. So maybe for next few minutes, if I was to be the FinMin or the RBI or the governor, how would I look at these 4 design principles that you just talked about in IMF paper? And I would actually probably change the order, because I think the order of those pillars need to be looked at slightly differently. So like I had said, first decision will have to be that whether we're looking at CBDC from a wholesale or retail perspective. While I understand most of the discussion will be on a retail, but whatever decisions one is taking for India today, we'll have to keep in mind that eventually we have to do both. You may start from maybe just the retail or wholesale, and within wholesale, we need to bifurcate again 2 folks. One will be the interbank settlement or a wholesale related to domestic transaction. One will have to be looked at into purely from an international trade perspective and a counter trade kind of a settlement in a digital environment. So how does it work in that environment? And if we understand China's context, they are playing from their strength because they have a huge trade and they want to establish their e-yuan or a digital yuan, primarily for a trade settlement transactions. They're not looking at as much, while eventually they would be, on the domestic wholesale or a retail for now. The whole focus is currently on design. So I think somewhere we need to, as a country, look at both. I personally believe that from a financial inclusion perspective, the CBDC and the retail part of the whole digital currency will be a very important one. Of course, wholesale side, we do understand even payment system like UPI, while for end customer is real time, for interbank is not real time. There are all kind of issues which can be solved if you had a CBDC involved for settlement between banks on a real time basis. So it can further put again accelerated kind of a settlement, lesser errors, lesser risk, all kind of other benefits. So that's a second part on the that why do we need to look at it into this. And of course, from a wholesale perspective, as I said, obviously from a settlement perspective, we need it. Internationally, something that one has to think, maybe India can't establish itself as a global international currency yet, because we also have a question, which in fact I have for you and Sambamurthy sir both, that how does this whole convertibility factor works? Because if it's not there, then you can't really go out and put your currency for a trade settlement out there and to be accepted and utilized freely, which the technology offers you. So that's on our first point, that whether we should look at wholesale or retail. I think my answer is that we need to look at both. At least design principle has to look at both upfront and all the choices that are in front of you. Once you have this, actually next question becomes a lot easier, whether central or decentralized. I think centralized would be very easy to do, but it would be like just automating existing processes. As early days, we used to talk about process improvement versus process reengineering. So if you want to take full advantage of the future view of the technologies, then you have to think of decentralized. That's a future that's a lot more foolproof. That means that the government and the regulators may have to give certain controls out, not necessarily everything. At the same time, everyone understand that it may not be completely decentralized as the private cryptos are. So there will be some sort of a balance that will be required. Again, it can vary depending on the principles it basis on retail, and within retail, different products, wholesale, and then which side of a wholesale. So the second question that way is a bit easier, that it should be a lot more focused on a decentralized kind of architecture. The third one becomes linked to that whether it will be token based or account based. Again, it goes back to the answer. If it is a wholesale based, probably RBI is okay to run an approach like the Kuber, where they have an account based relationship. They also are responsible then for the KYC. But the moment it goes retail, I don't think central banks have wherewithal or would want ever to be responsible for entire account relationships and then focus on the account, not the tokens and not the coins within that in a digital form. So again, it will have to be a hybrid. Probably for wholesale, they may afford to look at account based, but for retail, it will have to be a token based. Now, token based could be anonymous, non-anonymous. That's something that we'll discuss as we go forward. But again, as I said, they will have to be a hybrid approach. It's not like a this or that. This leads to finally the last pillar, which talks about whether it will be a kind of distribution, which will be a 1 tier, 2 tier, what it will be. And again, my answer will be a hybrid, because again, if it's a wholesale, if it's an interbank, you could actually do a direct one. If it is a retail one, it's better and a best to actually utilize all the bank, non-bank, all regulated entities and their infrastructure to kind of distribute it in a fast and accelerated way. So those are my initial overview. The only one additional point which is not there and I think will be very important in the design principle is some bit of an open architecture and flexibility, because as we speak, every month, every quarter, some new evolution keeps coming in. And the one that we were briefly talking about, there is a very intense work happening in US and Europe and some parts of Africa, where if it is a retail, how do you create an experience which is near currency, physical currency experience for the user? So there's a new terminology getting introduced called cryptocurrency notes. So these are the notes which are also carrying digital elements like QR codes, could carry some tags in between features. So you could actually make it fungible to use between digital and physical. Even if you're holding it in digital part, you're actually holding it as a picture of a note, which again can be physically or digitally transmitted. But this is all done and focused on creating a easy and a seamless access and acceptance by the end consumer. So this was just an example that we'll have to look at a open and a flexible architecture possibility. So all these developments, this is still at a very early stage. We could adapt, our whole solution can adapt to it. So that's my initial brief overview, sir. We will go into the deeper details.
Very, very interesting points. In fact, before I hand it over to Mr. Murthy, I would say that probably Reserve Bank has an opportunity to test this in a completely different scenario, although two are not linked in terms of the issues they have to face. I think it'll be interesting to watch as to how the Reserve Bank is going to implement the announced measure of the retailing of government securities. So how these accounts are going to be maintained, how these flows are going to happen, all this will give an indication whether a single tier, or when they are dealing with the retail, are they going to be dealing with millions and millions of accounts, or they going to tier it in such a way that they only mirror a macro number and then it's the rest of the people in the system who maintain the accounts. It'll be interesting to watch out for that. Murthy, over to you. Probably as you give your initial thoughts, you can go over and probably talk about the first question that I wanted to discuss formally, is that what's the kind of work that is going around the world and the different kinds of CBDCs and the use cases, whatever research. I know that you have done enormous amount of research. So probably you can give your initial thoughts and also with regard to the work going around before I will come back and ask Navin whether he has any specific issues to add. So over to you, Mr. Murthy.
Thank you, Mr. Padmanabhan. I think before I answer why, I think let me share some perspectives and all. So a couple of days ago, I was spending some time with some youngsters, millennials and all that. So talking of, generally ask them what is their view of this, what is this cryptocurrencies, because they're not about CBDC, they're not interested. That's not exciting. They're all about crypto and all that. So then I asked them what excites them and all that. All the guys anonymously said about, there are almost, I think, 13, 14 of these guys saying, guys, just finished their engineering and I think maybe ready to do a startup or join this thing. So uncle, the issue is very simple, they said. What is that issue? He said, anything that is not digital is dumb, he said. So anything that's not digital is dumb. So is your currency digital? So he has no patience to probably for me to explain what is retail, wholesale, what are the implications, design principles. When I asked him what do you mean by that, yes, uncle, anything which is not digital is dumb. Today our education is digital, music is digital, the media is digital, entertainment is digital, gaming is digital. I don't go out for play football. I told him that's not the right thing to do that. So, and we have large number of them, millions of them. I take them as a representative sample. If I go by that sample size, 100% of the millennials probably have a view, we are all dumb and we are not, probably this is one way of doing. I mean, that's not a lighter weight, but that gives a sense of what is in the minds. So we have 500, 600 billion of them. I think we need to be very clear. And then the subtle threat, okay, if you guys don't do it, we have a way of digitizing this field as well. I'm telling you that the kind of thought process that's going on. Number two, I think this is one subject which evokes a lot of excitement. I mean, forget about the usual hype cycle of Gartner and all that. In some quarters, there is excitement. Some quarters, there is anxiety. Some quarters, there is fear. Some quarters, there is difference. You can easily make out who has fear, who has anxiety, who has indifference and all that. And when we say the central bank digital currency, that I think we need to listen to what that central banks want it, why they want it, first of all, then before probably any of us would do it. I think most of the central banks have enough on the table. It's about growth, it's about inflation, it's about employment, right? Any of these central banks and all. So what, do they want to have one more fourth issue of central bank digital currency to do it? If they don't do it, what happens to crypto? They have market cap crossed over 2 trillion, and probably they're growing faster than our even stock markets all over the world, and right? There is always an anxiety where we don't want, even if there are 5, 6 members in the family, even 1 or 2 people go astray, then we have a concern and all that, right? So that is a concern. And basically, the central bank thinks, okay, does it solve the growth problem, my growth policy, that what I'm doing, the inflation policy I'm following, right? Or the employment that I'm to do, because different central banks have different kinds of targets, right? Nobody talks of monetary targets nowadays. So given this kind of, to address all these three, most of the central banks have a lot of activities. So how do they connect the dots? Does CBDC connect any of these dots? I think that's the larger question, because I am saying this because Mr. Padmanabhan said this is being dealt with by currency management department. Ideally, I would have liked a multidisciplinary kind of somebody from the monetary policy, somebody from IT, right? Some commercial bankers, some techie guys, right? Who have a sense of doing that and all. So it is not just a replacement of that. I think there is a larger issue involved in the whole process and all that. So it's not a question of one more job for the central banks. I don't think even CBDC comes there. The policies they pursue for growth, inflation, employment, they don't change. Simply because CBDC is there, we are not bothered about growth, we are not bothered about inflation. I don't think any central banks would do that and all, right? And then coming to this, both you and the introduction, they have said, number of central banks have jumped the bandwagon, about 80 and all that. But there is a subtle difference. The motivations for each of the countries is totally different. For instance, China, one view is that, the surveillance states, right? Because the whole thing has gone to Alipay and the Tencent, and the People's Bank of China have just absolutely no view how people are earning, how people are spending, where they're spending. They say the motivation why they are coming is the central bank. So they want to have surveillance and all. Secondly, they're losing sight of what is happening in the payment system. I think they've given too much freedom, even though they're a tried communist country. That's one motivation, surveillance, and then also dollar hegemony. They kind of, if US imposes a sanction, what happens to them? There is a geopolitical interest in that, right? Very broad, very, very powerful kind of things. Come to Sweden, they're already digital 98%. That the cash usage is only 1%, other extreme. Why Sweden is one of the countries which are also experimenting the CBDC when it's already digital and all. So even their Riksbank itself says that we are completely lost touch with what is happening. It's not about payment system. It only gives us a lot of monetary variables. What is happening? Today we call high frequency indicators, right? If today, because of the high frequency indicators, we have motor car sales and so on and so forth. Today, monetary authorities or the government, they get some clues that how to intervene, where to intervene and all that. Today, if this whole thing is with the pyramid, that the central banks or the government absolutely have no clue. So Sweden is coming from a point of view that earlier this 100% was done by central bank. Now they have become a marginal player in the entire payment system. Even to regulate, they have just absolutely no idea what's going on in the payment system. They said, no, we also want to have some kind of, a handle and the fork in the entire payment system. That's one way of doing it. We don't want to take all this payment system back to us. One way of doing it is CBDC. So what I'm telling is there is no one size fits all, even in terms of thinking. It's all motivations and all that. Why? Yes, for a long time, we'd have seen that, as Valor said, most of the thought processes, we don't need it. We have got the PayPals of the world and all that. We don't need this and all. Why China? US is getting it because China has got into it. So they need to counter the geopolitical risks, right? And dollar is a dominant currency. So to even today, 80%, 90% to do that. Whereas China, even though they are the dominant, trade player, the usage of their yuan is at largely 2 to 3% in the settlement, I would say. So they are afraid that China will have a dominance in this, the international currency hegemony. Otherwise, for a long time, they are not doing. Even European Union, they said, no, we are one of the best payment systems and all that. Let us not worry. I think it is Christian Lagarde who said, who was IMF, when people complained, how to regulate the cryptocurrencies, said if you can't fight with them, we join them, or fight fire with fire, kind of a thing. That's how European Union, of course, is little Lagarde in the CBDC, because I don't think they spent decades to probably go for one unified currency itself. So I don't think they want to have one more problem of before even this gets stabilized or this gets even fragmented and split. So finally, I just leave the technology. To me, there are a wide variety of choices, the technology choices. I think that's not a big deal, that we can handle it, provided we are very clear what problems we want to solve, whose problems we want to solve, and then in what way we want to solve, then find out what is the technology piece that we to do. The other day, I was just listening to one, the conversation, so where cryptocurrencies, we have something like, 2 years back, 4,000 cryptocurrencies. Now they said 6,500. Some fellow say 7,000. There is no count. And we have 200 countries. We have got 7,000 currencies. What kind of chaos that it will create? And because most of these cryptocurrencies are global, it's not that the Bitcoin is for US, Bitcoin is Germany, or Bitcoin for India, right? So what kind of implications that you have more and more people join? Typical network effects, right? And then another provocation, according to me, my sense is Facebook's Libra project now, which is changed to DARE. And the guy has got almost 2.5 billion daily active users. No central bank in the world comes anywhere near that. And then very popular one, all these people have a lot of trust in this kind of social media. Of course, we have a lot of socio-political issues surrounding this and all that. And he has enormous distribution power. Even 4 central banks together cannot do that. That's the kind of distribution power. Even if China and US do that, they are far behind this Facebook. But problem is that, unlike us, they don't celebrate what they're doing. I'm sure a lot of things must be quicking up. And then we have seen that, even the mightiest US Congress is not able to probably tackle or navigate these kind of things. So this, my sense is, these are all broad issues that we need to do. Whose problem, in what way we have to solve. Is there a problem? Yes, there is a problem. I think as we go along, we will discuss that. These are my initial thoughts, and I leave that.
Okay, thank you very much, Mr. Sambamurthy. I think before I move to the next question, I just want to give one clarification. I think it is not that the Department of Currency Management is entirely handling the crypto issue. I mean, the CBDC issue in Reserve Bank. That's a nodal department. So the kind of whatever you want to, I mean, we all expected the nodal department to be the payment system department, but to our surprise, it is the currency department, and the logic they have for that is it involves certain legal changes, because if this is treated as currency, then what are the legal changes that has to be taken care of will be better appreciated by the Department of Consumer. That is just by way of clarification. On just two comments, 30 seconds each. Valor is not worried about China. This question was asked to Valor during his interaction, and Valor says that as long as there is only one reserve currency in the world, and the value of cryptos are all linked to that currency, then we drive the monetary policy in the world. That's the counter that, I mean, I'm not saying that is right or wrong, but that's a counter that Valor gave. And with regard to the other coin, I mean, the question was asked whether you are there because of the stable coins, you are there because of Libra, you are there. He says, no. I think we are different. All this cannot talk about the same kind of safety like a central bank digital currency. They may talk about some kind of a security backing, but that has still not been tested. That's the point that he's making. So still, I'm not worried about that. So the issue I'm more worried, he says, is about whether this is required for the purpose of actually this is bringing in certain public good, which he was not very certain about. Okay, let me quickly move on.
Can I add a comment here? Just one. Sir, I also think that there are two things, sir. One, the China yuan also is pegged to dollar somewhere in the international trade. Secondly, they have been way ahead in a crypto development since they had allowed all the developments to happen. So all the use cases that CBDC would have solved, they've allowed private cryptos to develop and gradually get into solving it, as long as they link everything to dollar. That's what game they have played. And actually, while they will end up doing it, but they know that for them, this is not as big a work versus any country like India, China, because they already have all the know-how. They already are packed everywhere. So it's a natural extension for them. I'll just stop there, sir, briefly.
Okay, thank you. Now, let's quickly move on, try to discuss as many issues as possible. The question that I want to pose to both of you, and it's up to you who wants to go first, is that this country boasts of one of the best retail payment systems in the world. This has been acknowledged all over. Now, what is the additional advantage that a retail CBDC is going to bring about in this country, which, let us say, a UPI which grows at, let's say, a three-figure mark every year is not able to achieve in next 5 or 10 years? What is that CBDC is going to achieve? And why do you think that India need to take CBDC as seriously as the rest of the world? One of the questions that one of the youngsters who are talking to me said is that one thing that a crypto or a CBDC has to ensure, crypto ensures and CBDC has to ensure, is that I manage it on my own. The what they call technically the programmability without dependence on any third party is the biggest advantage that any of this brings. And if you are not happy with the private crypto, I will come to that as the next question, then CBDC obviously gets me there, which nothing else gets me there. Now, what do you think in your view is the biggest, if I'm asking you in the interest of time, set out 3 things in your view, each of you, why do you think that India has to go, or India will achieve through CBDC, which it cannot achieve through expanding its retail payment systems more?
Yeah. Who wants to go? Sir, you want to go first or should I?
No, you can go ahead. Please go ahead.
Okay. So it's very clear, sir. 3 things, since you asked 3 things. The first and foremost, sir, is the no payment product when it comes to money is powerful. When you really look at currency and the characteristics of money, every other payment option, including UPI, when it comes to store of value, when it comes to liquidity, acceptability, fungibility, I think they fail miserably. Most of them are surviving basis wherever the digital growth has happened, wherever the digital access is there. But the moment you have to go beyond the population who is slightly digitally challenged, and while those environment will change over a course of time, but we can't keep waiting forever. I think there is no answer other than having a digital currency. In fact, during DMON, in the FinMin, there was a lot of discussion that time, even through associations we were having. And if we had a digital currency or a CBDC that time, it would have been very easy to kind of remonetize the whole system without waiting for a physical money to come in. I mean, that has been a very quick. Nothing else would have worked. And similarly, sir, we keep saying that the way we do benefit transfer programs today is either through a bank account. So the whole process is so expensive and long that for a 500 rupee in a year or a 3,000 rupee in a year, you end up spending probably more than that just to maintain, manage, and legally comply with that. If you have these kind of a system, and again, these are assumptions, and obviously a lot will depend on how you design. Theoretically, you could send a code as long as the person has a phone or as long as the person has some sort of a card which can be programmed through a phone. And all that money goes into that, and it works offline, online mode, depending on the design principles. It works exactly like money, and your cost of distribution, reaching, corruption issues, transparency issue all go away. So the financial inclusion is one biggest. I've been very bullish that if the CBDC comes in and a right design principle set, right stakeholders are involved, actually the India's journey, like Sambamurthy sir said, the Sweden's whole aspect about being complete cashless by 2025, they know that if CBDC is there, it's 100% assured. So even the countries which have seen huge progress, even they know that if this is done, it is like a foolproof solution. Not that we are talking cashless, we're still talking less cash. So that's the first case, sir. The second remains that I think in our wholesale system, as we said, that even best of our system, there are challenges at the interbank settlement. I think if we have a wholesale solution of a CBDC, a high value, a lot of things can happen real time. So ultimately, we are using technology which only delivers two things. It increases speed, which in money's term, it could be increasing velocity, and it reduces geographies, which means depending on the regulatory environment and a global collaboration, your money moving between countries and a borderless kind of a transaction can be seamless. So wholesale side, both from an interbank, domestic, and a third part, which was a whole wholesale part, that the international trade, I think that becomes easy. The last part, the international part, was also about, sir, that if India has any chance of making its status about its currency, it has a reasonably stable currency, at least in this region, the SAARC region. If nothing else, even if we could establish our trade liquidity or some sort of a e-rupee as a digital medium for a settlement, what China is trying to do with their trade, I think that would be a very big move. And I think we have the talent, we have the technology, we have the know-how. So if we could do it, that will be a very big step forward. There aren't too many countries who can do it at the cost, at the scale that we can do, and in a manner we can do.
Thank you. Murthy.
Right. And I think I fully agree with Navin. I think financial inclusion is also always on the top of my thoughts. I think that should be one of the objectives of CBDC whenever we talk of these principles. See, I don't think CBDC, is it yes or no tomorrow? I don't think that answer is that clarity is not there. It's not a question of yes or no. It's a question of what form, and then whether it's retail, wholesale, what principles and all that. Is it tomorrow? No, tomorrow it takes years. Even China, we are talking of, they're far ahead. But they have established the CBDC Institute 10 years ago. They've been doing enormous research for the last 10 years and all. So it takes a lot of time, but we need to be in this game. So why we need to do it? So I would like a CBDC which will solve 3-4 problems, because the design should be taken into account. Because BIS has already laid out, for 3 design broad objectives and principles. He said, whatever CBDC you want to have, whether retail, wholesale, a combination of these two, hybrid, token, account-based, whatever you want to have, you should keep 3 things in mind. They said it should not harm your monetary stability and financial stability, whatever form you want to do it. Number 2, basically, it should coexist with all the existing systems, including physical cash and including the digital payments, including the bank deposits, including the bank intermediation. It should coexist with all the 3. Finally, it should be a public-private partnership, because they recognize, they say that central banks, they may not be innovative given this kind of their role responsibility, because they need more of kind of regulation and supervision. So you need a private sector who are good at customer interface, who are highly innovative. So have these 3 principles in mind. So what is the big problem that we have? One is the size of the informal economy in our country. 50% of the GDP comes from informal economy. 80% of the employment is informal economy. So today, I think we need to formalize as much as possible. I know that it can't happen 100%, even in the advanced countries, that there's a lot of informal economy like domestic servants and all that who take cash and all. That should be a small part, but we are in the other extreme. Why we want to formalize economy? Then they will be part of the mainstream economy. Whenever the government interventions do, government wants to have a policy. Today in the COVID pandemic, we have absolutely no idea how bad is the informal economy. Because there are no numbers at all. We only know that where numbers are there. It's immeasurable. And this is not the last pandemic, right? We have been having a lot of crises and all that. So we need to have formal economy. Is good for the government, good for all those people who are involved in this informal economy. Number one, I would like a CBDC design principles which will solve this problem. That's how I look at it. Number two, why you want the CBDC? Look at it, its cost of printing is only 4,000 crores as per RBI annual report and all. But as per one of the RBI report, which is mentioned, quoted, the Columbia University and all that, our ATMs alone, they disburse something like 60 lakh crores every year, right? What happens that I want to buy something, I'll go to the ATM, I draw cash, right? I give it to I go and do shopping, that fellow puts it in the bank again puts it in the ATM. The kind of merry-go-round. This is besides the cash that happens at the counters, at the bank counter. That is not, the cash counters are not closed because these things are there. Maybe it would have come down and all that. Plus, we know that there are sectors only cash transactions take place, 50%, 40% kind of a thing and all. So as per that estimate, that cost of managing this cash, moving this cash, is 1.7% of the GDP. That is a humongous 4 lakh crores. Even if a discount 50%, 2 lakh crores is the cost of moving cash in the country per year. To me, it's a sheer waste of money, apart from other things. So I would like a CBDC which would address this problem. And then, Mr. Padmanabhan, you raised the issue that our UPI is so successful. It's a toast for the world and all that. I fully agree with you. All of us are a part of that. The UPI, of course, NPCI has done a great job thanks to one regulation from RBI said that it should be bank-led payment system. They didn't want, because when we discuss about M-Pesa, PayPal, all the kinds of these words, even the network said that we have got rails and all that, why you want to invent and all that. There's one regulation I still remember. I know you're smiling, you are in that seat.
No. I'm smiling only because what was once a virtue, today probably people will think that is hampering the growth because the infrastructure, the front and the back end, CBS is not able to support the.
I'll come to that. I'll come to that. That's a bad problem, not this problem and all. Because that's a problem of plenty. I think it's a good problem to have. It's not a bad problem to have. That's way to do that. So, but with all the success, UPI, that now run rate is about 3.5 billion a month and all, it should reach that. But today, all this volume is coming from 225 million people, unique customers. What happens is there are 700 million people. With all the success we have in the last 4 or 5 years, we are able to touch another 700 million people in the UPI. So there are issues in that because smartphone, online, real time, all those issues would be there and all that. And also the acceptance points and all. Whereas you have 600 million internet connections, you have almost 600 million Jandan accounts. So even Jandan accounts, there is not even one transaction. If you have that, you will have a huge kind of success. Today, whenever government transfers money, you will see long queues in front of public sector banks to draw this money. That's why AAPS, one side is digital, the other side is not digital. So we have huge population to do that. Even if you have 3-4 NUs, I don't think you will be able to do that. When one CBDC comes, I think it will be much more faster. And then another point is that today, with all the celebrations we have, our per capita digital transactions is only 50 transactions per year. I'm sure you know that most of the countries, there are about 500. Singapore is 700. So we have a long way to go, given that kind of our population, our demography kind of a thing. So I feel that there is a scope for a citizen scale. What is citizen scale? Digital transactions, 1 billion a day. It's not a dream. I'm sure that it would happen because if you had somebody had said that 4 years ago we'll have 3 billion, 4 billion, people would have laughed. But NPCI is not a surprise. In fact, I remember Mr. Hota in all meetings he would say, I would like to touch every citizen in this country through one product or other of the NPCI, not necessarily UPI or a digital kind of a thing. The other part of it is if I can probably achieve a billion scale, that probably you will be able to impact more people, kind of a thing. And then let us not dismiss this big tech. I think today, even UPI, 3 big tech players account for 90% of this thing. So any central bank, any regulator will have a problem to understand, right? As I said, while high frequency indicators, I'm told UPI is also one of the high frequency indicators, but you need to drill down to find out which sectors, who are the kind of people who are using. So this system and all. So the moves that big tech takes, also we need to be careful. Like we have seen that already, the data that they have got that are also tying up with the banks for probably mobilizing deposits, which we never thought that it would take such kind of full financial intermediation. There is nothing wrong. Of course, they put pressure on all the domestic players to be more innovative, more efficient, more competitive, more efficient and all. So according to me, there are enough justifications for us to do CBDC. Do I mean that 26 lakh crores, whatever cash they have, will be entire thing digital? No, because they said all these things would coexist. Maybe in the first phase of experiment, I don't expect more than 2 to 3% of the present cash to be in the pilot phase. So these are my initial, I mean, that's why we want CBDC. This is my argument.
Very interesting. Thank you very much. I think both of you are adding lot of thoughts, quality thoughts to this entire issue. I think we need to speed up a bit. It's about 5 o'clock now. I'm just trying to combine some of these answers because some of these answers have been answered. I want to draw the attention of the audience to that. I think one of the questions I'm seeing here in the chat box is, when nations start digital currencies, it may disrupt all existing non-sovereign issues, cause mayhem. What steps need to be taken? I think Sambamurthy made it very clear about the BIS principles, how we have to make sure that it is done as non-disruptively as possible. The next question is, this digital currency ever replace money? Probably 50 seconds ago, he said he's talking about 2-3% and not this entire money being replaced by the digital currency. So it has to be a very gradual process. The next question leads me to in the chat box leads me to my question. So I'm going to link it. Whether the central bank is in the process of creating infrastructure for trading of these currencies. So I link it to the question, Navin, to you now. Then we need to answer the question, how is CBDC need to be looked at differently from a private crypto? And why should, for instance, since you have been on both sides, one be the focus of implementation, the other treated as outcast in many countries? Quickly, I think I will limit this question to you, because to Sambamurthy, next I have to ask 2 other operational banking questions. Please go ahead.
First of all, sir, we can't forget that whether we love or hate Bitcoin, that has been the origin for even CBDC. If there was no innovation like this, if there was no internet, if there was no mobile phone, which challenged a lot of set principles, set laws, set practices, and if each one of that would have been seen as outcasted and banned, would we even reach the progress that we are imagining today? So whether we like it or not, sir, the private cryptocurrencies development, while they are not all of them today are currencies, most of them are utility tokens, or most of them are a lot more than that, stable coins, which are only aiding the strength and the utility of currencies even without CBDCs, or NFTs, which are only helping, let's say, an individual to monetize their value over a period of time. So the kind of innovation we are seeing and the impact that we are seeing, it will not just be on the monetary policy, but all walks of life. And I think I agree with your and Sambamurthy sir's point that if you're going to look at it even in isolation at a RBI, even while designing CBDC, or even looking at a private kind of a crypto subject as a one view, it's going to be a huge problem. Because whether we like it or not, in financial world, the crypto is going to have the same impact what in communication, information, and entertainment the internet had. So that's the same moment we are in. And either we resist or we play ignorant, it won't help. It is inevitable. Whether we do it later, whether we do it now, whether we do it regulate. So the only difference between a private crypto and a CBDC, first of all, is the legal tender word. So both are probably form of money. One has a legal sovereignty, which has a promise to pay by the government. The other one is purely by a contractual nature, certain functionalities. It's nothing but a coupon which probably you get from your chai wala if you don't have a change.
So in other words, you are saying that one is a medium of exchange by law
Yeah.
The other is a medium of exchange, could become a medium of exchange by acceptance.
Yeah. By contract or by mutual agreement. And that one is evolving very rapidly. What was designed as a rebel to the existing systems in a government is gradually evolving to kind of aid. I mean, we spoke about the US, let's say the whole stand, because they know that this is going to disrupt and change everything that is already happening. So if we have a stronger currency, we don't need to do anything. But in India, we probably need to coexist. For us, there will have to be two legs. And actually a stable CBDC with a stable coin like an Indian rupee, actually these exchanges can flourish and a lot of fintechs can innovate a lot. So these are two different things. I think in India also, most probably these will need to be, private cryptos will have to be looked at more like a asset class, like you have a e-gold, like you have a, let's say any kind of a commodities that you trade in. And the risks are exactly same as they are for any other trading of commodities today. And which also means that there are no risk which probably the regulators between SEBI and RBI doesn't know and doesn't have a wherewithal to manage and mitigate. So our view is that they need to coexist. We have a wherewithal and knowledge enough to manage them, and actually they need to coexist because, like we discussed, that at some stage CBDC and an RBI and a government will have to decide what role CBDC will play. If you have to coexist, would you allow private to work and take it out, let's say, to everybody in all forms and all walks of life? Will they do it, or will these larger ecosystem will do it? So if you have a pegging of Indian rupee CBDC to all these cryptos, then automatically in the Indian environment, all those walks of life, the innovation is automatically taken care of. I'm trying to be a bit brief today.
Yeah, I think so. The answer to the question that was raised in the box as to whether the central bank will create the infrastructure of trading, one needs to understand that CBDC comes in predominantly as a currency. So if we have a CBDC India, CBDC US, there is an exchange rate between them. That's a currency trading if we are talking about, I mean, conceptually. Whereas when we are talking about private crypto as an asset, that trading is on a completely different footing from what we are talking about CBDC. That difference needs to be understood.
Absolutely.
Thank you very much. I think I go to two critical questions operationally. Murthy, this is for you. One is whether the introduction of CBDC is going to bring a complete changeover as far as the commercial banking is concerned in terms of rewriting the rules of intermediation, altering the cost of funds and margins, and changing the normal script as regards run on the banks. And the related question there, which is linked to the monetary policy, so I will ask this as one question, is that, do you think that the CBDC balance needs to be compensated in terms of interest paid? Because, for instance, China has clearly announced that it is substitute for currency. Currency earns no interest, so we are not going to pay any interest. So what, in your view, must be the way the Indian authorities must be thinking if you are to advise the Indian authorities? And will this decision whether an interest is being paid or not will actually determine to what extent the monetary policy is effective? Over to you.
Fine, thank you. Okay, let me first address this impact on commercial banking intermediation, and second is the monetary policy. Two issues, right? Two questions. Before that, just briefly, just 30 seconds. If you want to use cryptocurrency for a transaction purposes, for your information, in April, the transaction fees for a crypto transaction is $60. So if I go there, if I go out and pay, have a tea, 20 rupees or something, the transaction, if I use Bitcoin, it will cost me $60. I think we need to understand. This happened in 2018. Even today, the average cost is never less than $3 per transaction. So when we talk of retail use a cryptocurrency, whether it should be currency at all or it should be this thing asset, this should be one of the factors. Coming back to this question, whether it should be a coupon. So this issue has been debated. I think, as I said, BS very clearly said, advised all the member banks, it should do no harm to the existing systems, including this financial stability, monetary stability, and intermediation, banks' role at all. Supposing if we have a coupon, let us assume if there is a coupon, right? And for currency, I don't get any interest. If I get a coupon and all that, basically, why should I keep my deposits in the bank? Not really about cash with me. And then we have total cash in the system is 26 lakh crores, and the deposits are 50 lakh crores. Supposing, God forbid, there is a crisis, there is an anxiety. We have seen that happening in India also, right? 4 or 5 times it happened even in the recent times. If people start shifting the money from the banks to the central bank of the country, which gives the interest and also safety, the whole intermediation will go for a toss. So you can't have central bank of this country directly accepting deposits, even without interest. Forget about interest, but there should be a limit and all that, because central bank is the most safest and all that. And then who will give the loans if all the deposits go to the central bank? And no central bank would like to disrupt the banking system. It still plays a very dominant role in growing the economy, more so in a country like India, where our financial system is dominated by the banks, and it's continued to be so. And most of the countries it used to be there. I don't think this coupon on CBDC, to my mind, is absolutely no. Otherwise, it will disrupt the whole banking system and all that. Coming to this monetary policy even. See, the monetary policy in the advanced economies, the priorities are different. For emerging economies, is different. Why is it so? Because most of these advanced economies, they have zero rate interest, they're even negative rate interest, right? We have seen this Japan for a long time. They're doing it. Why they have negative interest rate? Because they're encouraging people not to save, but spend money so that the economy goes up. I mean, economy picks up. Similar thing in US, similar thing in Europe. And most of these advanced economies they have. Now they're telling if these people are living interest and the reverse interest, in Japan especially, people are drawing cash and keeping under the pillow and not spending it, because basically a thrifty nation and all. Similar thing is going to happen in other countries, because if you don't earn any interest, if you only spend capital and all that, especially people who are in the probably verge of retirement, it becomes a huge problem and all that. But if they have a CBDC, advanced countries, if there is a negative interest rate, either they pay negative interest rate or they have to spend money. They think zero lower bound interest rates. People, they think monetary policy incentive is there for central banks to do that. But for a country like India, basically, we are not in that kind of situation, because I wish that even though real rates are negative, but not the headline rate is not negative still, I don't think that it will happen and all that. Secondly, there's a monetary policy is almost settled. They don't track the monetary aggregates. Now, interest rate is basically the policy tool for most of these central banks, that too short-term interest rates, right? So I don't see a situation where the coupon should be given in both from monetary policy perspective, both from commercial bank intermediation perspective, and it's a big no-go. So that's where I end. And to tell you this about Chris Waller, you have repeatedly referred. I'm reminded of our common friend, Mr. V.K. Sharma, former executive director. In fact, one of my previous webinar, he provoked me, and then immediately after the webinar, he sent me a WhatsApp message. The CBDC is a...
No, incidentally, he only forwarded the Waller speech.
Oh, you... Okay. So today also he provoked me. He said, I've told you it's the solution in such a problem, you are doing webinar again. Then I said, no, we have some problems, defined problems, there need not necessarily be. As I said, I've given you the 3-4 problems, saving this, formalizing the economy, right? So financial inclusion, it all depends on the design principles and all that. So I've assured him, I cannot answer you, I cannot give you but I can flag the issue to Mr. Padmanabhan. That's all that I've assured him.
So one interesting point linked to it is that today the banknote and coins are M0 and rest is M2, 3, the money is layered. And the monetary policy needs to calculate all of it. The moment CBDC come into play, depending on the design principle, and as Mr. Murthy said, if it is zero coupon, then actually M0 will be the same. It will not become 2, 3. It will not get layered.
In fact, I thought in the morning in the cryptocurrency seminar, Gandhi said that we could have from M6 to M10, crypto and CBDC, right?
So that could be private crypto. That is their role. They can pack it with that, and that role can be played by them. That's what I was trying to say, that these two can work as a two legs. Anyway, separate subject for other time.
Yeah, I mean, before I move to the next question, I have an interesting question here from the audience. What will happen to the bank Nifty if people keep on using CBDC for daily transactions? Again, Mr. Naik, Gautam Naik has raised this issue. I think it all depends upon, I think nothing is certain as what is going to be the structure. I don't think the Reserve Bank is going to come out with a structure where the entire bank business is going to be cannibalized and Reserve Bank is going to take over. So that's not going to happen. So too early to think about the bank Nifty as of now, but keep thinking about it. Navin, coming back to you, privacy and cyber issues. These are two critical issues as far as any digital world is concerned. Now, the two questions for you, particularly given your background, is now, is the focus of cyber attack going to be shifting to the central banks because of the CBDC and they control the entire retail system? Is that a genuine worry which central banks should start addressing? Because again, in the morning, Mr. Gulshan Rai was talking a lot about how we should prepare technologically also before we go in for the CBDC. And the other is the privacy issue. Now, India is a country where privacy is very important. Most of these cash transactions happen in a way because of privacy. You could call it, that trying to evade taxes, this, that, so many things. But this is a cash economy, basically. So privacy, you remember, even when a new series of notes were coming in and somebody said there is a chip and your note can be monitored, there was mayhem in the market. So in a country like ours, how critical are these issues and how these needs to be addressed?
There are two parts to this question, sir. First of all, I think security is definitely a very important decision and consideration. And that's why I think the maximum time, I think a lot of other issues we have enough expertise and will solve. But security is something which gets challenged continuously by criminals, hackers, and all that criminal community. So we have to stay ahead, and which remains always a challenge. Again, it goes back to design principle. And that's where we keep saying that if central bank gets their role right, and if they get the design right, and as long as they keep lot more parties coming into their system and connecting to them, limited to the existing regulated entities who connect with them, and divide that value into a lot more people, where the value for somebody to come and attack you actually becomes not as big an incentive. Obviously, there is a certain time and a cost on which you could actually do anything that you want in a security world. So as long as you keep increasing it, automatically the motivation of them keeps going down. And if they have that kind of a capability, they have enough other targets available in the world. So as long as we keep looking at a design principle, which does not create, and that's where again centralized and decentralized question was actually relevant there. That if you have everything centralized, you're going to likely to get more attack. If you can decentralize it, again, your continuity, even if you're attacked, even for you to find out what went wrong, becomes a lot easier. So it's linked to the design principle about security. And the fact is, sir, we cannot design CBDC thinking today's system alone. We have to think that what kind of technology, what kind of challenges with that technology, and what could change completely different. And then how does the existing system can coexist and a role can play, as Mr. Sambamurthy was saying. So that has to be looked at from a security principle, and that remains a challenge not just for CBDC but entire digital world and entire digital progress that we are seeing. Now, privacy is a very tricky one, sir. And in fact, from a consumer perspective, both privacy and security actually are two different poles, or rather two ends of the bridge. They never meet. And the problem is that they are not same for every person. They're highly individual. In fact, most of the discussion, I avoid this because a lot of people don't like what I say. I say that there is an ex-consumer who's absolutely fine to, let's say, even in a payment world, give all their card PIN number to anybody, including their families, friends. He's fine. He doesn't mind somebody looking into their entire balances. So he's completely open, flexible in terms of both security and privacy. Somebody doesn't even give it to his son or forget to his wife. So these are highly individual. The question is, can we create technology and a balance and a feature, which is what we are trying to attempt, even in a payment system, where let's say an international transaction to enable, what value to enable, the handle is given to the customer. So the question is that can we create an architectural framework which puts out those risk points clearly there, and the degrees of the risk then is left to the participants, as long as those are identified right away rather than retrofitted later on and causing disruption. We have an opportunity to create a balance. Lastly, sir, on privacy, you and I both know, I go back to our first conversation on PPIs, that if you have a physical currency versus a PPI, even with no KYC, you have 23 probably or 80 points, which you would know. So it's only about when does a surveillance or a government or an agency wants to know whether you disclose or not. So anything digitized will always be available for somebody to identify, detect, which is vis-a-vis physical, a very different degrees. The question is, what would consumer think about it? So consumers are those who would move on to a CBDC kind of environment, would know about it upfront, and they would walk into it knowing that. Today's consumers are well educated that way, knowing that there are possibilities of people listening to what I'm talking. There are possibility of people looking to my messages. I think whether they say it openly or not, they understand it. After that, it is up to them that how much weightage they give it to that matter and how do we deal with it. Actually, to be honest, you and I can't deal with it other than giving a design principle and a framework which gives them flexibility. I don't think we should decide for them.
Yeah, agree. But the only point that many of the experts have been making, that unless we bring in some sort of a privacy, like, okay, now with privacy at what level? You tire privacy, and unless we are able to address that, I think the adoption would be a bit of a problem. So that, I think we will leave the thought there, because I
agree with
that it becomes difficult. I mean,
so there I agree with you. So if we could keep the same thresholds of 20,000, 50,000, 200,000, that would surely help in initial adoption. And then with a concept like cryptocurrency banknotes, that simplifies the process of getting customer adoption faster.
That's correct. Okay, now I'm trying to sort of marry most of the many questions that come in, because in the interest of the time, here is an interesting question directly addressed to Sambamurthy, which takes me to the next question to Mr. Murthy. Is that the BIS is set to work with 4 central banks, Australia, Malaysia, Singapore, and South Africa, to test the cross-border settlement. So my question is the cross-border settlement regime, because even Raghuram Rajan the other day talked about the crypto for the cross-border being the first type of experiment to be done. So how do you think the cross-border transaction world is going to change dramatically with the crypto and the advent of CBDC?
Right. I think it's a very important question. In fact, it will also partly answer our common friend, Mr. Sharma's this thing is a solution in such a problems. If at all there is a use case, I find a very strong use case in cross-border payments. Why? We all know the problems. 2-3 problems are there. First of all, it is very slow. Despite all that, with all these, whatever we have is only messaging networks, right? Messages will come, but the money, by the time that somebody gets money from US or the Gulf, by the time this guy does that, I think even today it will be only third day. Message would come on the same day, even within the 2 hours, 3 hours at all. One is the delay. Second is the cost, very expensive, and it is very opaque, right? There is a exchange conversion and there is a fees, and we don't know ultimately. Some is paid by the remitter, some is paid by the receiver, and all that. We don't know that. As you know, World Bank report, the cost of international remittance is 6.8%, which is too high. So if somebody is sending, say, $500 and you take away $30, $40, which is to me is a criminal kind of a thing. Despite all that, we have not been able to solve the problem. See, there is a project which is called Project Dunbar, if I remember, of the BIS part of it. They are coming out that the problem they want to solve is about the cost. Second is the delay and slow, and the third is because we have too many correspondent banks. And we all know today it's so difficult to get a correspondent bank open, right, for our Nostra accounts because of the KYC, AML, tough regulations and all that. Many are not interested. It has become very expensive, despite all CLS, PVP models we have, but it is only settlement in the books, not in the central bank kind of a thing. So they are experimenting of 3 different models. They call MCBDC, right? One, they are talking of compatible models. They say, okay, let each one have their whatever systems they have, central banks. Ultimately, it goes through, say, a customer, then goes to each bank, then goes to the central bank of the country, and then goes to the other side, recipient. Again, 3 stages there, 3 steps here, total about 6, 7 and all. So what they're telling is, let us build a compatible systems, like, for instance, India and say Dubai. So we have our own system, your own system, but we'll say both the systems should be compatible so that the message flow is I would say that seamless kind of a thing. It will be much faster. But they themselves say it will not have much benefit. Second model they're talking of is interlinking. Because they will be on standalone basis. But here, second model they're trying to do is interlink. Our systems and their systems will be interlinked for the cross-border payment. Third model they are trying to do is integrate the whole process and all. Most probably, I find that ultimately it will end up in integration, but 2-3 issues are there here. One is all countries, they don't have freely convertible currency. Some are convertible on current account, some are not convertible on capital account, just as we have. Today, for instance, I do export goods to some US, right? I raise a bill, I raise an invoice in dollars, right? But my bank will give me rupees, and then the importer in US will pay in dollars and all that. that has to be converted into rupees. Who will convert this? Even if it is, because it will be dollar CBDC, Indian CBDC, but still somebody has to convert it. So imagine we have 200 countries. You need 200 corridors to do that, right? Because of each country will have, if it is euro, I need a corridor. If it is a dollar, I need a corridor. If it is dirham, I need a corridor. If it is yuan, I need a corridor. So imagine, even if you consolidate to big countries, we need about 30, 40 corridors to convert it. The conversion still remains a problem, even after this. This problem, this is what BIS is trying to work out by integrating, say that common corridor for all these currencies. But still the conversion will be there. So there will be a trading platform there. There's an exchange platform there. So I think that especially for a country like India, you know that a lot of people who earn, at the low income in the Gulf, they do a lot of remittances. All of us have handled and all that. We have seen the kind of price they pay, apart from the money they pay. And all these guys have got mobile phones. So even without going to exchange companies, take off-day leave or a Friday off-day, spend on this, waste time and then instead of doing the work there. So to me, I think they will do the interlinking and then go for integration. The model they are now examining is euro, right? When all these countries joined together and they had one unified currency, they have gone through all these processes, right? Especially the target and all that.
Yes, Murthy, but I think there was a question from the audience also on that. But the challenge for the euro is that I think still the final word has not been written unless you have a common fiscal policy, a common money, what kind of problems it could arise. I think it's still an issue on which I don't think the experts have agreed. And to your cross-border transaction, I'm trying to again pick up the question so that we are answering as many questions as possible. Whether CBDC is really required for cross-border, some digital is required. Digital will improve efficiency. But please remember, settlement finality happens when it is settled in central bank money. That is where the CBDC comes in. That's all. Please go ahead. If you want to say anything more, please go ahead.
Yes. Basically, when we have CBDC, it will be there has to be some central bank arrangements and all that. Say, I don't want to name an institution, that we have an institution which does the dollar clearing, right? Because central bank of this country wanted $500 million kind of collateral, right? So if you have a CBDC, then you have a swap arrangement. The conversion factor still remains. But only thing is you have a corridor, one single corridor, maybe the aggregation takes place and all. Even today, we say that if any small value transactions are there, the dealer would aggregate all that, make $250,000, $500,000, and then do the conversion and all, right? So conversion will not go away in CBDC.
So that's where
the finality would come down.
Yeah.
So that's where I was asking both of you earlier, sir, that don't you think the real benefit of CBDC in a full-blown manner can come only if Indian currency also becomes convertible?
It has to. But I don't think the India can go the convertible way to take care of CBDC. I think there must be I think let's not get the priorities wrong. I don't want convertibility because I want CBDC to be a success. But convertibility has to be, we have to be ready for that in our own right. I mean, that's the only point. Let me come to the final. I think we have been simultaneously answering many of the questions also. Let me come to the final issue that I want to this thing. One of, again, the reasons for CBDC that has been talked about is that it will further the cause of financial inclusion. Let me get a little provocative here. When there is the financial exclusion is on account of, despite a digital push not happening, how do you think that a CBDC is going to improve the situation? Quick answers, maybe Navin can go first and Murthy can come in, or the other way around. I leave it to you.
Sir, you want to go ahead first?
Yes, no problem. See, first of all, what we are talking of only payment system. Basically, when you talk of CBDC, the payment system, whether it is digital, physical, has no design principle to improve the income of these poor people, right? So we are talking of all these wonderful digital CBDC and all that. None of them have a design principle to improve the income of these poor people. That is why they remain financially excluded. So that is an issue that, as I say, a policy issue that need to be addressed, which cannot be just addressed by doing that, right? That is why today, why I said, all this informal economy, I've seen the Kalawala, a lot of self-employed people, they have just simply ravished by, especially the second wave. I see it myself when I go out and all that. All those people have disappeared. They have not been able to come. So it will not solve the problem of improving the income of these people, which is essential for financial inclusion. That needs to be handled differently.
Navin, anything to add?
I think I gave the example, so I agree with Sambamurthy sir that the fundamental issue remains at the income level first. But as I said, in terms of efficiency versus the current model, it will surely improve because you don't need to go through that full model of first opening a bank account, maintaining, managing that. In a certain situation, you could reach those monies and subsidies and any such benefits a lot faster. So to that extent, there is a clear benefit and a clear case. There the cost doesn't get added, in fact reduced.
So let me give an example, Ms. Padmanabhan, quickly. The other day, I just went to buy some Kela, right? Kela wala, this thing. So he has got GPay, PhonePe, all around his cart. I asked him, out of curiosity, what is this? Do you accept? Yes, sir. Aapka pass hai kya? That he has the QR code. I'm just telling you the real story. So I asked him, how do you operate? मेरे को पता नहीं साहब, आपका QR code होगा, you pay me. I asked him, why you want this? It's only 40 rupees, 50 rupees. No, it will directly go to my account. Sir, for every transaction, I get 25 rupees cash back or incentive and all that. Right?
Right.
So incentives work. So to me, it's improving his income unwittingly, not by design, but CBDC cannot do that.
Okay, there is I have discussed. I'll come to you for your final thoughts. There is a question, interesting question. Does it even make sense for the RBI to take over the day-to-day transaction operations? Do they have the bandwidth and technical know-how to handle it fully? Irrespective of whether they have the bandwidth or the technical know-how, I won't get into that. They have run several systems successfully, but a central bank taking over individual retail transaction, I think, must be carefully thought through because it can have huge reputation risk. Any final thoughts? I think we have been answering most of the questions simultaneously. I think several questions we have answered. I'm just going to flip through quickly whether anything we have not answered, but in the meantime, a minute each. For you, any final thought, any final advice? If you have to give an advice to the Reserve Bank that hits the headlines tomorrow morning, give the advice.
Navin, you would like to go ahead?
Oh, okay. So it's a decentralized system. So let's think as a decentralized power, but also centralized control. So let's how balance it. Let's not try and replicate what we have as it. This is an amazing opportunity for all of us to make a difference in this as well, like we have done in payments.
Right, Murthy?
So I think my advice to whether government, RBI and all that, I think they need to create a CBDC institute. I'll tell you, because as I said, that multidisciplinary approach, there is a tech stack. What kind of tech stack you need to have, you have to decide. Monetary policy implications, you need some economists who have a lens on monetary policy. You need some bankers who have a clue on this, how the banking operations can be impacted, whether disrupted or improved or whatever it is, value additions they can do. And then you need some tech guys. So it's a multidisciplinary approach that we need to do. And then, so if somebody asked whether Reserve Bank of India will operate the system, I agree with you because they've gone away from that because they are more on supervising the system. So they obviously can't operate. It is a conflict, except RTGS, which is systemically important and all. So I think like they've created IDRBT, they created IGIDR and all that. I think it comes in between. I think because this is a long-run process, I don't say that, you can't have a date by tomorrow or day after tomorrow or next year and all that. Entire thing would become CBDC because as we go on implementing, as you go on a gradual way, you will find a lot of opportunities. You also find a lot of challenges and all that. So always I feel like you have done institutional framework. This is an institutional framework. Of course, NPCI can carry on. They have got the wherewithal to do the operations part of it for a pilot basis.
I think there are a couple of questions which relate to whether these transactions can happen without the internet. Somebody has commented that when VPN itself is getting removed, what are the changes? But we will not get into the second question. But the first question, the internet part, I think that is an issue which is probably getting behind us very quickly. But there are technologies, I think even in China, large country like China, how it does on an offline mode, and as soon as it connects, how it updates, all these things are possible. Just to answer that question, I think to me, it has been a pretty interesting. I've deliberately tried to cover as many critical issues as possible so that the audience get a flair for what is this that we are talking about. And I'm extremely thankful to both my panelists, Sambamurthy and Navin. I think your expertise and research, the amount of knowledge you have gathered on this particular subject comes through in your answers to every question that I put across to you. So thank you very much. Thank you to Ruchita and Venkatesh for giving us this opportunity. I think we have managed to finish more or less reasonably in time, 2 minutes overrun. So thank you very much.
Thank you. Thank you all.
Yeah, the last part of the program is vote of thanks, and I would like to start with Padmanabhan sir. The way he has told that retail payment system, we are the best in the world, so we can also be going forward best in the world in CBDT, and how he meticulously planned this webinar, the amount of work he has done coordinating with us at Almus, and then with Mr. Sambamurthy sir and Mr. Navin. That was great. That is what he is known for. Thank you very much, sir, for this. And to coming to Sambamurthy sir, you have rightly told that there is a CBDC institute. It's very much required, to get a knowledge of people like you. And RBI should not be closed on that, to do themselves or not taking public opinion. They will be doing damage to the economy. That is what I think so. So then coming back to Mr. Navin Surya, he has clearly told that there is a very thin line between Bitcoin, cryptocurrencies, CBDCs and all asset in it is all closely linked. It is like our old days, what Sambamurthy said, that if it is not digital, it is dumb. 90s we think, if the currency is not tradable, that is dumb. So let us trade. And there was a fight. Trading in rupees bad. If you want to trade, you trade in cross currencies. So we opened up, market opened up. Now there is India, there is local market. Similarly, crypto has come to stay and nobody can stop it. Luckily for us, the government is not banned, and Supreme Court also told that crypto is a thing to be. It's an asset class, which I completely agree with Navin Surya. The panel has central banks views and PSU banks views and a private sector view from Navin Surya. Very interesting thing has happened. And finally, I will also thank the participants, bankers, corporates, and various financial market participants. We at Almus launched this webinar as a launching pad for our annual conference, which is slated in November or December. So Padmanabhan sir said about it, nothing much to talk about convertibility, something not to connect CBDC to convertibility. But what comes to my mind is that this is an opportunity to open up how convertibility is required for in today's world, and what not having convertibility, in my opinion, it only damages the economy. It doesn't do anything good to us. And as Navin Surya has rightly said, it will facilitate international trade, and we have a talent in India, and we have a knowledge, and we can do it. With this, I conclude. Thank all my Refinitives and all of you once again. Thank you very much.
Thank you.
Thank you. Thank you, everyone, sir.